The drama around the spectacular rise and epic fall of flexible workspace provider WeWork was so intense, it garnered its own Apple TV Plus show called We Crashed. Not a good title. And it's centered around its cult-like co-founder and CEO, Adam Neumann. At its peak in 2019, WeWork was valued at $47 billion, thanks to massive funding from groups like Masayoshi Son's SoftBank, which invested more than $10 billion. The firm then fell into the abyss right as it filed its IPO, and it revealed in its filing a financial mess, profligate spending by and improper dealings with Neumann. Its IPO never came to pass. Whole thing had to be canceled, and eventually the company filed for Chapter 11 bankruptcy in 2023. But on June 11th of last year, WeWork emerged from bankruptcy with new CEO John Santora at the helm. With 5 decades of commercial real estate experience at Cushman & Wakefield under his belt, can he lead it back to and beyond its glory days? John Santora joins me now in a Fox Business exclusive live on the Claman Countdown. I know what you're going to say. I can. How is it surviving and how is it thriving right now?
Oh, it's been a great year for us, Liz. We're in a very different place today than we ever had been before.
You're kind of the antithesis of Adam Neumann, which I guess if you were an investor in the original WeWork, is a good thing because he was the guy at the helm when this whole thing crashed and burned. How are you changing what WeWork was, which was a very hip co-worker space that had kombucha in the fridge? Are you taking out the kombucha? It's done, isn't it?
The kombucha and the beer taps are all gone except for a couple of places throughout Europe. But yeah, it's a mature company today. It's very disciplined, very structured in the way we invest and the way we deliver our services to our clients around the world.
Well, when you say a mature company, you're so mature, you just struck a brand new deal with Amazon. Tell us about that. It's for Santa Clara, which is in Silicon Valley.
So we have a number of deals with Amazon around the world as they are a large member of ours, and we took down some space in Santa Clara on their behalf. So a lease, specific term for their use only, and we have the right to renew it, but they can leave at the end of a very short term.
Let me dig in here. What's it for? Because Amazon had said, we want everybody back to work 5 days a week, and then they all come back and there wasn't a lot of space. Is this for employees who actually have found themselves without desks? Tell me exactly what you will be offering.
It's part of their return to work office, their return to work. So within different locations around the world, we are supplying them with office space for different user groups. Particularly here in New York, we've announced earlier this year about 330,000 square feet at 330 West 34th, and then another deal at 5 Manhattan West for them. So we support them in their key markets around the world. So
let me get a number here. How many million square feet do you have? I know you have real estate in 120 cities and something like 37 countries, but when you swept in to run it, the company had just cleared the debt. So how do you forge ahead to expand?
So today, no debt. We have 45 million square feet around the world. We are looking to invest in key markets and will grow with our clients. And in some cases, we now have leases that are expiring. So in those cases, we'll take on new leases or maybe extend the leases that we have.
When you came in there, like I said, you don't look like Adam Neumann. No. You know, I'm sure it was a very young workforce. It was one of those sort of valley startups. Yeah. What message did you send to the team that you were left with?
I think it was a pretty clear message of, this is a real estate company. We're here to service our clients, to deliver great service for them, to provide them the flexibility, the ability to grow, to shrink, to move around the world. And the way I handle things is very disciplined, very structured, right? We're going to make deals that make sense, that are profitable. Every deal that we make today has to have a level of profitability in it, period, or it doesn't get past the team.
Interesting. So you're dealing with banks, JP Morgan, who?
We're dealing with the largest banks in the world. I'm not going to sit here and name them. I know you'd love me to, but the largest banks in the world. Last week, we had a little client event here in Manhattan, and we had 35 heads of real estate that live here in New York, and it was for several large banks, pharma companies, technology companies. You would never expect, without having done detailed review of who our clients are, that we have 47 of the Fortune 100. working in our spaces.
Well, you've done a big, big move here. Yeah. I just want you to explain to people what it is you offer. Is it by the day, by the hour, and can you customize the space, make it bespoke?
So we offer from 1 to 1,000 or 5 to 5,000 different sayings in there. But for the entrepreneur, right, who's just starting a business, we'll give them a number of seats. They can drop in at any point they want. They can get a $300 or $400 all-access card and go visit any space around the world.
Wait, that's it, $300 to $400? What, per month?
Per month.
Okay, like an Easy Pass.
Yep, like an Easy Pass too, and that's what it is. It's an easy button to get around the world in any of our locations. And then we have that small and mid-sized business. We'll hand them or work with them to get 50 seats, 75 seats in a couple of locations. And then we have that whole enterprise client. You mentioned Amazon. I was in a meeting the other day with the head of real estate for Merck as we looked at his portfolio around the world, in Singapore, down in Latin America, and in Philadelphia and some other locations.
So you had sales close out for 2024 of more than $2 billion. You've been EBITDA positive, profitable, but when will you be real world profitable?
Well, listen, EBITDA profitable because we're investing $80 to $100 million this year. We'll continue to make that investment, but my
At the same
date,
level, 80 to 100 million a year?
$80 to $100 million just to upgrade the space. We have to stay up to speed with our technology, the quality of the space, and what we deliver. But 2026 is the year that we are cash flow positive.
Cash flow positive. So can I then push you beyond that date on the calendar and ask, would you try an IPO again?
Absolutely not. We are a privately held firm with no debt, and we're going to continue to grow and grow at the right pace and a profitable pace.
Okay.
What happens way down the road could be something different, but not in my vision right now.
And no more partying on private jets and foosball tables and things.
Nope. No private jets, absolutely
But
not.
it's still, you're making it fun,
Foosball,
though,
that's
right?
okay.
You'll make it fun, though, for
Yes,
people.
absolutely. We have a good time. We work hard. I enjoy the team. It's a great team.
We are watching WeWork and you work to get WeWork working again. Thank you so much for
Absolutely.
coming on this pretty big anniversary.
Yes, thank you, Liz.